Everyone. Here we go, starting off September. Looks like we got some disappointing, but probably not unexpected manufacturing numbers if you've been watching this channel. What are some of the things we would have heard over the last month or so of doing these discussions? We would have heard that the business investments are down. We would have heard from some retail organizations that they've missed expectations. And a lot of the tariffs have been aimed at manufacturers. So, we see it's real now, right? I think until today, tariffs were chatter for things we thought were coming. I think you can see now in black and white detail that yes, tariffs are having an impact on our economy and frankly the world economy, right? We're not in this alone. So I think, especially with the new round of tariffs that went into effect September 1st, which are far more consumer oriented, right? Things that you and I buy at the stores, we could really see kind of a double whammy of tariffs, right? The first round kind of impacting manufacturers and farmers for sure, no doubt. But now, it's going to impact the wallet of the average consumer. I shared this probably 3 weeks ago, but I'll say it again because it's pretty important. They're estimating that this latest round of tariffs are going to cost the average U.S. consumer $1,000 a year. Um, that's, I don't know how else to say it. That's a tax, right? It doesn't show up on your tax return, but it'll certainly show up, and many families are going to have to make choices because they don't have the extra $1,000, and that's unfortunate and disappointing. So it's going to get worse before it gets better. I think that's just how these things go. The thing that I also saw this morning in the same article about manufacturing was that fear is escalating. And as you've seen me on this channel, I kind of try to balance where's the fear and greed scale. That's pretty much all I try to do all day long, is try to figure out where that is in the average consumer, because the average consumer is a buyer. They're the owner occupants in my market. They're my big competition, and if they get afraid, I can be more aggressive on my prices, right? So that's why I do all this. Good morning, Troy. How are you? Very low volume. See, you guys got to tell me these things. So let's just crank this up. I bought a new mic, so it's supposed to be better. Hopefully that's better. I'll lean forward too. So these are important things to realize, right? If the consumers get afraid, I think they disappear from the real estate market. If they disappear from the real estate market, it helps me as an investor be more aggressive on prices. It also will hurt some real estate investors who are not prepared for it, right? They'll hold inventory longer. Their hard money costs will eat up their profit, and they will also exit the landscape. So it pays to be conservative. It pays to watch all this stuff, and that's what I'm doing. So the fear level is certainly rising. So hopefully, this is something to track. A couple of other things I saw is, people are exiting stocks, right? The stocks were down about 400 points as of this recording. They're moving into bonds, which is taking the 10-year even lower. I watch that because that has at least some indications around where mortgage rates are going. I suspect I will be refinancing a few properties probably early next year. But again, I think rates are going to be down for probably most, if not all, of 2020. So that's going to be interesting. Then the other one that's going up is gold, which I have owned a little bit here and there. It just sits there and looks pretty, right? It doesn't produce cash flow. You got to store it. You're afraid people are going to steal it. But it is one of those things when people get afraid, you can watch, right? It's one of those indicators. Something else I saw is, I didn't know this, but apparently September, historically speaking, has been the worst month for the stock markets. I think that's, I don't know, at least an interesting statistical anomaly, given that we're in September and we're starting off with a drop of roughly 400. Again, I don't put too much stock in all of this. I think every year is different, although I think this September could be pretty bad, given the setup we have going. Another one is Morgan Stanley put out an article basically advising clients to get defensive. And that's interesting, right? Basically, what they're saying is put on a pair trade, which basically means they want you to short something, in this case, growth stocks, and then protect that with some other kind of investment. So they're really seeing an opportunity to get short in part of the market, which is interesting. It often pays to be first with these kind of calls. So, and then if others follow, then it gets to be a crowded trade and all of that. Again, not a stock person. I'm just watching this because it helps with the fear and greed thing. I think what's going to happen here is the stock market's going to get really, really choppy, lower at the end of September than it is today, and that could cause people to get afraid, right? That's all I'm trying to do here. And then the last thing to talk about is just the world economy, right? There's a lot of things going on, right? We've talked about on this channel, right? There's Argentina that's dealing with some currency devaluation, and I'm watching to see if that ripples through South America. We have the protests in Hong Kong, which could flare up at any minute. We have Brexit, which could cause further pain in Europe, and it's just the whole world economy is going through something. It really makes sense that rates are low now because we've got to get through it. And again, this is an interrelated world economy. I don't think you sort of button down the hatches and try to get through it yourself. I think you have to do it, especially the size of the U.S. We need to be a part of the solution going forward. So it's going to be interesting. But as I open this September, at least the first trading day, fear levels are high. We're seeing tariffs hit manufacturing. We have respected Wall Street organizations basically saying get short, and we have a lot of stuff going on in the world. So, hey Troy, would I invest in cryptocurrency? I am not a fan. I certainly believe that at some point in the future, there will be a cryptocurrency. So I'm a believer. I'm a believer in blockchain. I'm a believer in all of that. I'm just not smart enough to pick the winner, right? I think there is going to be a winner, and I think everybody else will be a loser by default. I have long said that I think the winner of the crypto game will likely be created by a company that the average consumers know and respect, as opposed to some black box in some foreign country. But who knows? So no, I would not put $1 in cryptocurrency. It could be gone. It's the tulips of the 1800s, and I'm not touching that again. So that's my feeling on crypto. Thanks for asking. All right, everybody, have a great day. Take care.